Hi everybody, welcome to the channel. For today's stock, we're going to be looking at Smith& Wesson, the firearms manufacturer. So in the beginning, we'll look at evaluating the stock price, and then at the end of the video, we will go into machine learning to do predictions for that stock price movement over the next year. So let's jump right into it. Looking at the Excel screen, you can see we're just seeing errors for the moment, but once I type in the ticker number, SWBI, everything will be populated. With the financial data pulled in from QuickFS, we can see the discounted cash flow model has been generated, and we're coming up with an intrinsic value of $20.90. And using a margin of safety of 70%, that brings the valuation down to $14.63. Now, one thing that stands out here is the short-term growth rate of 0%. And we can see here the net income CAGR over the last 10 years has actually been negative, 9.36. But I am going to use 0% as opposed to a negative number, and I'll discuss that a little bit more in detail in a few moments. But first, I would like to look at this growth grade of a D plus, which is based on these data points here. So return on invested capital is the only metric here that they average over 10% over these years given. Book value, earnings per share, sales, they're not averaging over 10% for the years indicated. So D plus, I'd like to see this higher, at least in the B range, but still return on invested capital. At least I know management knows how to handle the money they have on hand. Debt to free cash flow, this is shown as a negative. That's because free cash flow last year was actually negative, and we'll discuss that a little more in a few moments. Looking at dividends, past 10 years, dividends have increased well over 100%, 166%. Now, that's what I like to see. Share buyback, share count has gone down 23%, and profit margins averaging 10% for the past 10 years and 18% over the last 3 years. So these results are a little mixed in how I like to see it, but I have invested in this company, Smith& Wesson, and actually I invested it when I did an evaluation a couple years ago, and it was actually higher than this. And I'll show you my purchase prices. Let's jump up to a little more of the financial data up here. So we can see here the net income. So over the last 10 years or 10 years ago, back in 2014, was 89 million. Past year was 37 million. So that's where we got that decline. But it hasn't always been declining. A little mix back in 2021, 252 million. So that's a great number. And then free cash flow. You can see down here, negative, negative 72 million. And one of the reasons for this is because they are moving their headquarters and they're paying for that move, building a whole new headquarters from Massachusetts down to Tennessee. So they're paying for it out of the cash they have. So that's why I'm predicting why this is negative. They are expected to finish the headquarters this year in 2023. So my prediction is once that is complete and they're done paying off those expenses, this will return to being positive like it has been for the 9 years prior. So that's why I'm still a little bullish on Smith & Wesson. But we'll jump down to this graph, which takes into account a lot of these data points up here. It's a little easier to see. Again, I like to see more of a steady growth going from left to right. This is a little mix. So not my ideal situation for a stock, but I did take a little chance on Smith and Wesson, and I'll show you where I stand currently. But I still have a generally positive outlook over the next couple of years. But this is not really a stock I normally invest in. I usually invest in stocks that have a more steady line going to the top right, and this has been pretty mixed. Moving over to the purchases, so I have been investing in Smith & Wesson since November of 2021. You can see my stock prices originally in the low 20s, 22, and then the price started dropping, and I bought it all the way down to $8.60, and now it has been increasing, and my cost basis right now is $13.64. So as it dropped, I was able to lower my cost basis. But based on stock appreciation, you can see where I stand. Those early investments down quite a bit. However, at that low point in late 2022 and earlier this year, I got it at a good price, and it's been up quite a bit, 41, 31%. And I have purchased as recently as this past May. But if I would have purchased the S&P during these same time periods for the same dollar amount, we can see what I would have gained or lost during that period. And these two columns here just gives me the overall with dividends. So right now it's Smith and Wesson. I'm actually down 10%. But if I would have invested in the S&P, I would have been up almost 3%. So currently, compared to the S&P, I'm actually down 13%. But I still have a generally positive outlook. And that's also backed up when we look at the computer modeling and forecasting over the next year. But first, let's look at the current price action for Smith& Wesson and the past history. Here we go. As of August 25th, closing, trading for $12.21. And let's just look over the past 5 years. So we can see here Smith& Wesson back in mid 2021, June, it was up $30. And I started buying into it in November, and that's when it dropped along with the market. So it does have a tendency to go a lot higher, and my computer modeling actually shows this over the next year. So let's jump over to Weka for the computer modeling. Here in Weka, you can see I already ran the modeling. So August 21st, 2023, this past Monday, the far right column will be the stock price for Smith& Wesson. It closed at 12.33, and all the valuations underneath that with the asterisks, these are the forecasted predictions. Other columns are just other data points that were used to help with this forecasting, such as PE, price to sales, and such. And this column here, the second to right, that's the index I used. So in this case, I did use S&P 500, though it's not a S&P 500 company. I just used that to have an index reference as well. And if we go down 52 weeks to August 19th, using this M5 rule, the projection is to be in that $16.58 range for Smith and Wesson. Now, the M5 rule is usually a little more optimistic, and Random Forest is a little more bearish. But we'll see here for Random Forest using the same data starting August 21st, this past Monday, closing at 12.33 and going out 52 weeks. It's actually showing up to be a little higher. Just over $20. So this is a little unusual. If you look at some of the other stock valuation videos, you can see Random Forest is usually lower. So this is showing a good sign of a positive outlook over the next year for Smith& Wesson. Now, let's take this data and we're going to put it in Excel to make it a little easier to analyze. Back in Excel, I'm on the forecast tab, and I already pasted in the values from the M5 rule and the random forest that we got from Weka. And from this, we can go ahead and graph this data out. So let's move over to the graph tab. Here we are on the graph tab, and we currently have the M5 rule selected. So this red line here, everything to the left, that's historical. So the historical prices, and everything to the right is the forecasted price in the blue line. The orange line is the percentage increase or decrease over the next year from this starting point. And as we saw on the Weka software, the projection is in August of next year, stock price to be around 62.59 for the M5 rule, which would be a growth of 34 to 35%. And if you can see here, over the past 10 years or 9 years, the stock has had these peaks once it hits some lows here. So this is back in 2014, then picking up to 2016, then dropping again. And as I mentioned, when we were looking at the current price value chart, in 2021, it peaked at about $30. So I'm currently projecting that we're going to start getting into that initial peak season for Smith& Wesson. And if we jump over to the random forest, we can see here for random forest, the price was jumping up to $20 over the next year, which would give a forecasted increase of 62%. And again, judging over the last 10 years, it's not uncommon to see this stock tick up after hitting a bearish streak like we've seen over the past couple of years. So let's just take an average of the two methods, M5 and random forest. That's given us a projected valuation of $18.32, which would be just under a 50% growth for the coming year. And if we now include the S&P 500, we'll just use the average to compare. We can see the index is projecting to be in a decline for the next year. And I do have a video on the S&P 500 which actually shows similar data points to this chart, that over the coming year, depending on what method, it'd be either flat or negative, and even the average was about a -3. Here we're showing -4% for the S&P 500 over the next year. And so right here, that green line is the percentage change for the S&P, and the yellow here is the historical to the left of the red line and the forecasted to the right. I know it's a little difficult to see here because the S&P index, that's in the $300 to $400 range or so, and Smith and Wesson is more in the $10 to $20 range. So let me just change to this graph format. Going to use a log scale to make it a little easier. Yeah, there we go. So based on the two averages for the M5 rule and random forest for each, the Smith and Wesson stock price and the S&P 500, see a little clearer. So here, this red line, this is showing the increase or projected increase for Smith and Wesson percentage wise, going 50%. I know that's quite high, but again, when we look at these prices, historical prices, it does have this tendency to jump up. And S&P 500 showing flat to a little bit negative. So this is why I'm still bullish on Smith & Wesson. I haven't sold because I do have a good outlook based on these data points that we just looked at. I'm sure there's going to be some skeptics on that 50% growth for Smith & Wesson, but as mentioned, they've done it before, twice in the past 10 years, and that's what the current data is forecasting. And for me, it would help me get back in the green. I know I'm down slightly, especially compared to the S&P 500. And on the S&P 500, here we showed flat to negative. And I also have a video specific for S&P 500, which use a lot more macro data points, which also indicates a either flat or slightly negative over the next year. So you can check that out too, if interested. Hope you found this useful, and I'll see you next time.